Hello, I'm Crypto Casey, and welcome to Last Week Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, the top gainers, as well as the latest global news stories affecting the crypto markets this past week. We will talk about what happened in the markets, the increasing volume on decentralized exchanges, adoption of blockchain technology by corporations, banks, and governments, the US dollar's true inflation rate, the out-of-control stock market, and the incoming cryptocurrency bull market. To check out the links to all the articles we discuss, go to cryptocasey.com/lastweekcrypto. This week's episode is brought to you by Crypto.com, an exchange with over 55 different cryptocurrencies you can buy with bank transfers, debit, or credit cards at true cost with no markups. Crypto.com also offers a Visa credit card you can use to access, manage, and spend your funds, all while earning cryptocurrency rewards. It's so important to have relationships with multiple exchanges as a cryptocurrency investor. So if you use the link below to sign up for Crypto.com, you'll receive $50 worth of cryptocurrency for free when you use the referral code CryptoCasey, all while supporting the channel. Check it out by scrolling down to the description area and clicking on the link. Please note that the best way to contact me is by visiting my website, cryptocasey.com/help, to fill out a contact request form, or you can email me directly at casey@cryptocasey.com. Also, I conduct a weekly AMA, or Ask Me Anything, every Wednesday on Instagram at instagram.com/CryptoCasey. So please use the link to my Instagram account listed in the description area to follow me and ask me anything you want every Wednesday. Awesome. So let's get started. The prices of all the top cryptocurrencies by market cap surged upwards after starting to experience some movement last week. Bitcoin up 6%, Ethereum up 25%, XRP finally coming back to life with a 26% increase, and Chainlink up over 36% over the past 7 days. Taking a look at the highest gainers, we finally have some new tokens in the top spots. In fact, if you've been keeping up with my AMA answers on Instagram, you would know Band has been on my radar the past month, up over 95% this week, followed by Bancor, up 73%, then Ocean Protocol, another project I have my eye on, up 67%, and another top gainer from last week, Edgeware, up 65%. Nice. So as most of us know, Bitcoin and Ethereum operate on two separate networks. However, with the rise of DeFi, solutions have come out that allow investors to essentially tokenize their Bitcoin to use in Ethereum-based protocols. And nearly $100 million worth of Bitcoin moved to Ethereum this past month, a growth rate of more than 70% in June alone. Andy Bromberg, president of CoinList, said tokening Bitcoins on Ethereum is the biggest opportunity for decentralized finance's growth today. And he's right. Since the launch of Ethereum-based decentralized exchanges a few months ago, they have taken the cryptocurrency trading space by storm. Uniswap, one of the more popular decentralized exchanges, single-handedly overtook Gemini, Bittrex, and Poloniex in trading volumes. In fact, at the time of this article, Uniswap had handled over $108 million in trading volume over the past 24 hours, which eclipses Bittrex's $71 million, PolonieX's $56 million, and Gemini's $46 million. And overall, decentralized exchange volumes rose 174% in July, topping $4.3 billion and setting a second straight record since June. Co-founder of Three Arrows Capital, Kyle Davies, comments that decentralized finance has exploded over the past couple months and that he expects this trend to continue. So, slowly we see big centralized exchanges like Coinbase, Binance, Kraken, and similar become on-ramps for converting fiat like US dollars or euros into cryptocurrency like Ethereum. From there, it's so much easier and more efficient to use decentralized exchanges like Uniswap and Kyber to swap Ethereum for other digital assets like Chainlink, Band, and Unibright. Stay tuned for a step-by-step tutorial on how to use Uniswap in the next week or so. I think you will be completely blown away at how far blockchain-based technology's user interface and utility has come in a relatively short period of time. As the relevance of and need for centralized exchanges decreases, hopefully, we will see an increase in customer support and other perks by exchanges like Coinbase and Binance as their competition stiffens. We shall see. Cryptocurrency trading isn't the only thing being revolutionized. Corporations, banks, and governments alike recognize how pervasive blockchain technology is, and some have been making moves to get ahead of the curve, one of which is Coca-Cola. In 2019, the first set of North America Coca-Cola bottlers adopted a blockchain platform based on Hyperledger Fabric. The project aimed to streamline and make cross-organization supply chain transactions frictionless and transparent. Since implementation, it has proved to increase transparency and efficiency in bottlers' intricate supply chains. Now wanting to extend the use case from an internal affair to a larger audience, a new project was launched by Coca-Cola bottlers in North America, Provide, and Unibright, which is scheduled to showcase initial results in Q4 of 2020. Awesome. In a different industry across the Atlantic, a state-run bank in Switzerland is poised to launch cryptocurrency services for its clients. On August 3rd, a representative of the bank said, "We are working to offer our clients a solution for the trading and deposit of selected cryptocurrencies. As an established regional and national banking group, we wish to give our clients secure access to these new financial products." These plans have been launched in response to an increased demand for crypto services in the country. And we should expect to see more stories such as these make headline news as the world eyes blockchain as the US dollar declines. In an article published August 4th, Ripple CEO comments that global governments are looking for a serious alternative to a strained financial system. Further down, he explains the momentum behind digital currencies on the cusp of the 2020s was a question of trust in the financial system at the end of the day. As global populations continue to lose confidence in fiat currencies, as we are seeing with the US dollar, they will choose to diversify. Our future global financial system will do the same. The US dollar's recent dip reflects mounting tensions between the US and China, the United States' faltering response to the public health crisis, internal political polarizations in the midst of an upcoming election, and a disappointing US economic recovery thus far. As if the US could not become more unappealing globally, Trump's conflicting sentiments towards TikTok, wavering between wanting it banned and endorsing its sale to an American company with the expectation of the US government receiving a chunk of the sale, calls the safety of foreign investments made in our country into question. This tweet by Peter Schiff sums it up perfectly, stating, "The death of the rule of law is another reason for global investors to reject the US dollar. A nation that can shake down a foreign company, force it to sell to an American competitor, then demand a piece of the action for itself is not a safe jurisdiction for foreign capital." So as the US continues down this path of becoming more and more lackluster from an investment perspective, the Fed is expected to make a major commitment to the ramping up of inflation. Recent statements from Fed officials and analysis from market veterans and economists point to a move to average inflation targeting, in which inflation above the central bank's usual 2% target would be tolerated and even desired. But are we really only at 1% inflation? Or is the goalpost constantly moving to keep the masses at bay? In this article, you can review the inflation estimates today as if they were calculated the same way in the past. This first chart depicts today's inflation estimates using inflation metrics from the 90s. And as you can see, this 2% target the feds are touting is actually more like 6%. And looking back even further before the goalposts moved for the 90s data, this graph depicting an inflation chart using metrics from the 80s shows that we are currently targeting a 10% inflation rate. But hey, considering how transparent and intelligent the US government proves to be time and time again, they are definitely using far superior updated metrics to determine the true inflation rate and would never fudge data to make something seem just fine and dandy when it's actually terrible. No, not the US government. However, that wouldn't seem like that much of a stretch, this whole business of making things seem fine and dandy when Americans are actually on the brink of starvation and homelessness. The Nasdaq hits a record high as the tech sector keeps stocks slightly positive. Why is it so? Finally some market fundamentals to back the pump? Well, not exactly. Same song and dance we've seen since the pandemic. Investors are awaiting another aid package from Congress. This tweet sums it up rather nicely, stating markets are sitting on the highest market valuations in history and are waiting for another stimulus package. The Dow's nearly 75-point jump was highlighted by gains for Apple and Walt Disney stocks. Interesting that the entire US stock market has reached record highs in the midst of a pandemic that has left many people jobless without enough food to go around, and on the verge of eviction. Under those circumstances, I can definitely see how Apple and Disney are thriving and almost single-handedly lifting the Dow to new heights from all this rampant consumerism taking place. Speaking of consumers, I think this tweet puts the actual plight of consumers into perspective. Tough year for consumers. First they lose their jobs, then the Fed makes the rich richer, then the banks shut off the credit spigot, and now the Fed wants to crank up inflation, making the cost of living even higher while devaluing the purchasing power of the dollar. Well done. Let's take a closer look at some of the factions that make up the total consumers in the US. 39% of younger millennials, defined in this article as ages 24 through 29, say the COVID-19 recession has them moving back home. And of those that haven't moved back home, 15% say their parents are paying part of the rent, while another 15% say their parents are covering all of their housing expenses. So we've got the younger generation of consumers living with their parents or being bankrolled by their parents. These parents make up a large percentage of Generation X, as well as some baby boomers. All three generations have likely had some degree of disruption to their ability to work and generate income. So we can see how the vast majority of consumers that would rather be spending money on new Apple products, a trip to Disney World, or splurging on a Disney Plus membership might not actually be able to do so. What about another faction of consumers, like small businesses? Well, former Starbucks chairman and CEO Howard Schultz says millions of small businesses will close without federal help. More than 3 million small businesses in the United States have closed since February. And if we continue down this path with no significant stimulus, we estimate that 35 to 40% of the 30 million small businesses in America will begin to permanently close by Labor Day. So we've got millennials, Gen Xers, boomers, and small business owners alike struggling to meet ends meet. Somehow a measly $1,200 a few months back and an upcoming potential $600 is somehow holding this all together. If the feds are printing trillions and trillions of dollars, where's it all going? It's certainly not going to the consumers. And how is the stock market at all-time highs even fathomable? Well, I think Trump gives a clue in this article released August 4th. A record high for the Nasdaq would all come crashing down, says Trump in a tweet, including your jobs, stocks, and 401ks if Biden wins the presidency. If that's not a tell, I don't know what is. And this tweet nails it. There is more market manipulation on Wall Street than in crypto. Trump is propping up the stock market to fake it till he makes it back into office the next term under the ruse that he is responsible for how absolutely amazingly the US stock market is performing. Well, he's not wrong. I don't know about you, but I prefer investing based on fundamentals, not manipulation. And many others agree. Bitcoin Delirium makes a reappearance while risk assets, like the stock market, surge. This tweet states, cryptocurrency as an asset class has outperformed nearly all other asset classes year to date. Stay long crypto until schools, daycare reopen. Until then, the economy won't function and money will be continuously printed. So we will wrap up on this high note with 2 reasons crypto's bull market is coming. Anil Lula, the co-founder and COO of a crypto market research firm, Delphi Digital, says the incoming bull market for crypto will look completely different than the last one. Mostly because there won't be just one, but 2 different bull markets simultaneously playing out over the next 12 to 18 months. One will involve the rotation of capital from zombie projects to protocols where the underlying product is actually being used and accruing value. Decentralized finance is outshining alts, and investors now demand properly designed systems that actually contribute to the broader crypto ecosystem. This time next year, I predict there will be at least 25 in the top 100. That's a lot of redistribution of capital, even without an influx of new money coming in. The second bull market will be led by the usual suspect, Bitcoin. As policymakers around the world continue to provide pandemic-related economic relief, Bitcoin's long-term value proposition as a hedge against fiat currency debasement only grows stronger. Circumstances are converging to accelerate us towards precisely the kind of world crypto was designed for. He goes on to say, at the top of the 2017 bubble, a friend of his gave him a shirt as a joke. It said, "Moon, the moment when crypto market reaches a total market cap of $1 trillion US. And as these 2 crypto bull markets converge, he thinks he may be caught wearing it sooner than he initially thought. I think the best way to sum up the contents of this episode is with a tweet by Robert Breedlove. Bitcoin is the most obvious investment opportunity in history. Nice. So if you're a beginner and would like to take advantage of the opportunities available in cryptocurrency, I'm opening up access to a beta version of a course, then following some feedback, releasing a full-fledged flagship course on everything you need to know as a beginner looking to become a profitable cryptocurrency investor. Go to cryptocasey.com/beta to sign up now. If you're interested in learning how to become a developer in the industry or learn more about the advanced technical concepts of blockchain technology, the best and pretty much only resource available to my knowledge is Ivan on Tech's Academy. Using the link in the description area below, you can enroll in the course at a discounted price. So there are resources available to help you get involved in the space. And once you get into crypto, please do not ever send cryptocurrency or any funds to someone that claims they will send you more in return. There are so many scammers out there impersonating crypto content creators. Do not ever trust someone who claims to be a trader or broker in the space who offers to take your funds and generate a profit for you. Also, do not ever let somebody convince you to install mining software on your computer. All of those are 100% scams, so be careful out there and always think twice before considering sending someone you don't know cryptocurrency. Well, that was Last Week Crypto with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. To check out the links to all of the articles we discussed, go to cryptocasey.com/lastweekcrypto. So have you guys tried out any of the decentralized exchanges like Uniswap yet? How much longer do you think the stock market will keep pumping? Are you going to miss out on $50 worth of free cryptocurrency by signing up for Crypto.com? If not, click on the link to Crypto.com in the description area below. Also, let me know your thoughts on everything we covered in the comments below. Be safe out there.